BMW, renowned for producing the ultimate driving machine, is now steadily carving out a notable space in the electric vehicle market, giving even the famed Tesla a run for its money. Traditionally, BMW has been synonymous with luxury automobiles like the 8 Series Grand Coupe, M3 sports car, and the X5 sports activity vehicle. However, the German auto giant has quietly transitioned into an undercover electric vehicle contender. In just the third quarter of 2023, BMW delivered an impressive 93,931 all-battery electric vehicles. This figure surpasses the combined total of General Motors, Ford Motor, and Rivian Automotive. While some age-old automakers boast larger electric vehicle sectors, very few can compete with BMW's remarkable sales mix. For instance, Volkswagen sold 210,000 all-battery electric vehicles during the same quarter, but this only accounted for 9% of its total sales. On the other hand, all-battery electric vehicles made up 15% of BMW's total sales for the quarter, a significant increase from less than 9% the previous year. This data highlights BMW's deliberate and strategic approach towards electric vehicle development while maintaining a variety of powertrain options. BMW's lineup of electric vehicles mirrors its traditional lineup, offering electric versions of the i4, i5, and i7 sedans, along with the electric iX sport utility vehicle. At their essence, these vehicles remain true to the BMW brand, but with an electric twist. For instance, the iX xDrive 50 SUV, priced around $90,000, embodies the classic BMW attributes of ride quality, handling, and build, but with the added advantages of being quieter, more spacious, and achieving a 0 to 60 acceleration in just 4.5 seconds. Creating a few noteworthy electric vehicles doesn't automatically make a car maker's stock a worthy investment. However, it does suggest a sustainable business model for traditional car manufacturers, especially as the global market for gasoline-powered cars is projected to shrink by half by 2030. This anticipated shift has led Wall Street and car companies to re-evaluate BMW stock based on its fundamentals, without the looming risk associated with a declining gasoline car business. However, the journey ahead isn't without its hurdles. For example, the recent surge in new car prices in the US, which have risen by over 20% since before the pandemic, has contributed to boosting BMW's operating profit margins to 11% in 2023, up from the historical average of 9%. Yet, there's a projected reversion to 9% in the near future, which could pressure earnings, potentially dipping to $17.50 per share in 2024 from nearly $29 in 2022. Despite this, analysts like Jefferies' Philippe Houchois remain optimistic, rating BMW stock a buy with a price target of 1/16, indicating a 25% rise from the recent 92.5. And if BMW outperforms market expectations in defending its margins, the stock could soar to 143s, marking a 55% upswing. What might the market be overlooking? Houchois identifies 3 key aspects: capital efficiency, a robust balance sheet, and a strategic decision regarding its Chinese business. In 2022, BMW acquired a majority stake in its Chinese joint venture, thus consolidating its Chinese business in its financial statements instead of as equity income. This not only allows for a stronger foothold in the world's largest market for new cars and electric vehicles, but also represents a prudent choice according to Houchois. Moreover, BMW's cautious investment strategy is also commendable. It's anticipated to reinvest about 6% of its sales back into the business over the next 3 years, slightly less than what's projected for General Motors. This amounts to almost $30 billion, with an estimated $24 billion in free cash flow, part of which will be channeled into dividends. In 2023, BMW declared a 9 per share dividend, and based on the expected cash flow in the coming quarters, dividends ranging from 6 to 9 per share are forecasted for 2024. Financial stability is further echoed in BMW's solid balance sheet. Excluding its finance arm, which facilitates car loans to eager BMW buyers, the company has $20 billion more cash than debt, amounting to nearly a third of its market capitalization. And when adjusted for cash, the price-to-earnings ratio on estimated 2024 earnings stands at about 4 times, quite a modest figure for an automaker, especially amidst the uncertainties of the electric vehicle transition. With these promising indicators, it might be only a matter of time before BMW solidifies its position on your list of electric vehicle winners. Despite facing the headwinds of pricing and earnings pressures, BMW's strategic moves in the electric vehicle sector, coupled with its financial prudence, underscore its potential to thrive in the evolving automotive landscape. Furthermore, the financial prospects of BMW are also looking optimistic according to market analysts. Based on the insights from 21 analysts, the actual price target for BMW stock is set at $112, which signifies a potential stock price increase of 16.7% in the following 12 months. This, coupled with various stock price predictions from different financial platforms, reflects a positive outlook for BMW's stock performance in the near to medium term, painting a promising picture for potential investors.